back? Welcome back to another Bitcoin video today. We're going to be discussing something very important regarding interest rates and inflation and, generally speaking, how the market doesn't reflect the present, but it reflects the future, and how that can affect our prediction in regards to the Bitcoin bottom. And more importantly, how it suggests, and we'll get into it in a second, but ultimately the conclusion is this: it suggests that the bottom is very close on Bitcoin, right? And that's in line with our 4-year cycle theory. Now let's get into that. So our 4-year cycle theory is a theory on Bitcoin as a date range trend. Everyone knows this by now. Everyone who's watched my channel before knows this by now. For those of you who don't, 30-second explanation. Essentially, it's based on the halving. And what I've done is I've analyzed the trend. I've identified 4 separate patterns, and that is that there's a trend in how many days there are from top to top in each cycle, from bottom to bottom in each cycle, from top to bottom, and from bottom to top in each cycle. And I've extrapolated that data, and it's led me to the prediction, and this is a prediction that I've held since November last year at 60k region. It's led me to the prediction that we'll bottom out in Q4 this year, right? That's the bear market bottom, Q4 this year. And if that occurs, guess what? And we want that to occur, right? Because not only do we think it will occur, but we want it to occur, because in order for Bitcoin to remain an attractive asset for investing, right, we need it to remain predictable. And the ultimate way for it to remain predictable is not to break an 8-year-long cyclical trend. In fact, it's a 10-year-long trend if you're including the 2012 halving. So ideally, we don't break it, and ideally we bottom out when expected as per the 4-year cycle, which would be Q4. And I think the evidence genuinely lines up to that. I'm not saying that because I want it to happen. I'm saying that because I think it's actually going to happen. I think we'll bottom out in Q4, and not only Q4, but I think we'll bottom out, before December. So somewhere in October to November, I think we'll bottom out. And this is something I've stuck by for a while now. The October to November part is relatively new, but the Q4 part is age old. It's almost a year old. But essentially, my opinion's this, right? I think we'll either bottom out at 17.5k, or we might go down to this red box here at 11 to 13k. I think most likely we bottom at 17.5k. The reason I think that is because I think we're getting to the point in the macro situation where it is going to begin reversing soon. And I think a lot of people disagree with me on that. It's fine. You can disagree with me on that. That's fine. I don't care. I think the point is, I have a buying plan, and my buying plan doesn't really matter. It doesn't really care where the bottom is. My buying plan is as follows, right? And so essentially what I'm going to be doing on Bitcoin is this: 33% I'll buy at around 17.5k. Let's just say 18k, right? Just for sake of clarity. 33% I'll buy between 11 and 13k, and then 33% I'll buy at the trend reversal, which I'll tell you what it is in a second. And then if we don't reach 11 to 13k, I'll just buy 66% at the trend reversal instead. Right, so that's my buying plan on Bitcoin. But trend reversal, in my opinion, would be a break above this downtrending yellow line. And the reason why I think that we're going to be seeing a bottom before December is because even in the worst case scenario where we go down to 11k, which in my opinion would be the worst case scenario, we will be bottoming out before December, because look, we get to a point in which we're pushed between 11k and the trend reversal. We have to make a move, and since I don't think we'll go any lower than that, it means we have to move upwards, right? Therefore, the bottom is in late November. So the latest we can bottom out on Bitcoin, in my opinion, is late November, which means the longest possible time between now and the bottom would be just over 2 months, and the shortest possible time would be, the end of, mid-October, right? We could be bottoming out within the next month on Bitcoin. And so many people disagree with me on that, but I'm going to show you why. And this is why I'm making this video, right? I'm making this video to answer that query, because I get many comments disagreeing with me on that. That's fine. You can disagree. I'm going to show you why I think that, because I don't think I've done this properly, right? I've only vaguely referenced it. This is why I think we can bottom out in Q4. Not only the 4-year cycle, which of course is a reason in itself, and that's a very big reason, right? I think that we have to believe in that. When there's a date range trend that's been going on for 10 years, you have to some extent, put faith in it. If you don't, you're ignoring TA. So that's one of the reasons. The other reason, and this is a pretty major reason in my opinion, is the fact that the markets, and I'm going to get into it in a second, I'll just need an intro into it. The markets don't reflect the present, okay? A lot of people have reasons for Bitcoin to go lower, and most of those reasons are, we're in a recession. We're in a recession, everything's bad, everything's going to get worse. That's the reasons generally people give, okay? Yes, on paper that makes sense, all right? However, that is neglecting how a financial market works. A financial market doesn't care. It doesn't care whether we're in a recession or not, right? It does, obviously, it affects it, but generally speaking, it doesn't care what happens right now. What's going on today in the world doesn't matter to a financial market. Why do people invest in financial markets? They invest in financial markets with ideas of what the future will be like. So extend that logic, all right? And understand that a financial market, the S&P, Bitcoin, whatever it is, it doesn't care about what's going on right now. It cares about what could be in the future. And this is why we have a trend on the S&P 500, okay? This is the inflation chart. Every single yellow line on this chart matches the date to every single yellow line in this chart. What you'll notice is that these lines on the S&P 500 chart are placed at the bottoms of each major downtrend, okay? And applying that to the inflation chart, you'll see that on most occasions, not all occasions, but on most occasions, the bottom for the S&P 500 occurs when the top for inflation is in, right? So this means, and so I'm circling a few points where it worked out. Okay, basically it worked out here as well, and as of right now, we have no reason to believe it's not working out in 2022. We've had 2 failed occurrences, okay? So we've had 3 successes, 2 failed occurrences, and potentially 4 successes if we bottom out at 17.5K. So let me explain that again, because I know it's a little bit confusing. Okay, I have placed a vertical line on the inflation, on the S&P 500 chart at every single major bottom out, every single major bottom on the S&P besides COVID. I have then gone and placed the same line at the same date on the inflation chart, and I've identified that generally speaking, the S&P 500 bottoms out when inflation tops out or when inflation has just started to decline. Meaning that in all of the situations historically, or not all of them, but most of the situations historically where the S&P has bottomed out, the macro situation has looked bad, okay? So right now, what do we have? We have the macro situation looking bad. However, as of right now, we have no reason to believe inflation is doing anything but topping out. So, extending that logic, we have adequate reason to believe that the bottom is actually in on the S&P 500 already. Okay? Or maybe we come down and test it again. We've done that in the past, right? We did it in 2002. We came down and tested it again. And, we've done it before that as well. The point is, the vast majority of the downturn for the S&P 500 might actually be over already, right? And inflation topping out might be indicative of that. Now, that doesn't mean we can't come down and retest for lows. We could very well do that. In fact, there is reason to believe we will do that. If we go to the SPX chart, actual charted pattern for it, we go to the daily chart, for example, we can see we've broken a macro uptrending line. We're heading downwards towards support now. And we could go all the way down to 3,600 again, okay? If we do that still remains valid, right? That whole thing I just identified remains valid. That's just a retest of a low. That's not actually a new bottom created. So at this point, taking the trend from the 4-year cycle, and then also taking a trend in regards to inflation and the S&P 500 bottom, understanding that when inflation tops, the S&P 500 generally bottoms, and inflation has topped, we can identify that, hey, not only is it likely that the markets bottom out soon, but it's also likely that we don't go below where we went before, meaning it's likely we don't go below 3,600 on the S&P, and it's likely we don't go below 17,500 on Bitcoin. Yes, we will retest those levels. We might wick below them, but generally speaking, that's what the trend suggests. And this isn't really my opinion. Like, this is the thing, guys, right? This isn't my opinion. All right, this is just a trend. I'm observing what has happened historically, and I'm applying the logic that I see as valid from the historical data to the present. And so this is what you need to do as an analyst. You need to get opinion. It's not opinion. Get that out of your head. An opinion would be, okay, I think there's a 60% chance Bitcoin breaks up here. That's an opinion. Me identifying that generally speaking, the S&P 500 bottoms out when inflation tops, and understanding that inflation has most likely topped now, meaning the bottom is in for the S&P potentially. That's not my opinion. I'm just saying that that's an objective fact of the situation. It's just the reality, right? So understanding this trend, and if you agree that it's valid, and then if you also agree that the 4-year cycle theory is valid, you should hence agree that a 17.5K bottom between October and November would be the most likely outcome for Bitcoin. That's my proposition to you. Now, you can agree with that or not, but I think it's hard to say it's not my opinion. Of course it's my opinion, but the fact of the matter is it's based on objective data. It's not based on subjective data. This is objective data. I'm pointing at realities that have occurred. I'm pointing at the realities. The halving is a reality. The date range trend that's come off of that is a reality. The fact that inflation topped when the S&P 500 bottomed historically, that's a reality. I suppose the opinion would be, what level. I suppose the opinion would be whether this line acts as a trend reversal. That's an opinion, but I just want you to kind of understand that there's a very fine line between opinion and reality, and I think this is more leaning on the objective reality of the situation. But regardless of that, let me know what you guys think. I think this is very interesting. I would just like to say before I end the video, BitGet, the exchange that I'm partnered with, is offering a special promotion. If you sign up to BitGet using my referral link and make one trade, regardless of how big or small it is, in fact, it can make you no money. You can just buy and sell with $10. You will get $10 USDT deposited into your account as a reward. So go ahead and take advantage of that using my referral link. Thanks for watching. If you go to my YouTube channel homepage and click on the join button, you can see the rewards that VIP members gain access to. They get 4 trading setups per week, prioritized reply to comments by myself, trading psychology, a lecture, so a 2-hour lecture on trading psychology, and then exclusive Telegram group access where we can discuss the charts and discuss the active trades from the exclusive trading setup. So if you're interested in that, that's 40 AUD a month, which works out to be, as of September, around 28 USD a month, less than $1 a day. Go ahead and sign up to that. Moving forward further, we have the BitGet Exchange, and this is a very important one. The BitGet Exchange is something that I hold very closely as a trader. Why is that? Well, because I spent about a year looking for a good exchange. I got pretty much scammed on Binance last year during the bull market in 2021, and I found BitGet. They reached out to me, and then I reached out to them for the partnership. They got 0 trading fees on spot pairs, so it's free, entirely free for spot, and then on futures, they've got about 4 times less the fees than Binance, 4 times lower fees than Binance. And Binance is known to be the most popular exchange with the lowest fees. So this exchange is extremely cheap. On top of that, it's non-KYC, which holds true to the values of cryptocurrency, right? It's decentralized in your personal land. You don't need to link your identity to it if you don't want to. And it's globally available on that non-KYC format. So sign up to BitGet using my referral link in the description below. And in doing that, you'll gain access to over 4,000 USD in rewards by completing a few tasks. So again, use my referral link and sign up. It supports the channel and it supports your own trading endeavors. And then further, we've got the Crypto Academy, and this is if you want to learn how to trade, you want to learn how to do TA, you want to learn how to analyze a market, and that's where the Become a Trader 10-unit course comes in handy. Now, this course, and you can go to our website, you can read the abstract here, but this course was developed by myself and Megawell Crypto. We made this course during the start of 2022 and released it in around May 2022. We analyzed basically dozens of different courses, technical analysis courses that are available on the market. We analyze what was wrong with them, we analyze what was right with them, and we analyze things we can put together. We've created this so that we've got slideshows, we've got videos, we've got worksheets, which is no other course has that, by the way, all of which is kind of aimed to kind of direct towards any kind of learning style, whether it be verbal, whether it be visual, whether it be practical, any kind of learner you are, you can, profit from this course in terms of knowledge and then move it into the market and actually profit financially. So if you're interested in this course, you can go to our website, read out the 10 units, whatever, read everything you want, and then chuck us an email here at cryptoacademycourses@gmail.com, and we'll get back to you with all the relevant information. Thanks for watching the video, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.